So let's now look at a few topics that are not present in the BPP textbook, but it's there in the study hub. So it's a very good topic, and I felt that many students actually don't know how to respond when such situations are being asked in the scenario. Because ethics is a very important. I'm doing this in very detailed manner. For few chapters, I might not do this in a detailed manner. I might be going with the BPP itself because it's not very important to look at all the aspects or all the angles. We can learn that as well during the practicing of the questions. But the ACC study of this particular point is something which is currently happening. Like it's a current issue, and it's very important that we understand how to tackle them and how, as a professional accountant, tackle such issues. So, summarizing is that there could be conflict of interest. Conflict of interest is where you are interested as an accountant, you are interested on something, and but the other party, the opposite party, your client or someone is not interested on it. So you have differences of opinion. That is called as conflict of interest. The conflict of interest can arise due to two factors. One is due to professional accountant versus client. Second is client versus client. So when it comes to professional accountant versus client, what happens is that firstly, three things could happen. One is principal, agency, and commission. In principle, this test is whether reasonable and informed third party having knowledge of all relevant information, including safeguard applied, would consider the conflict of interest as likely to affect the judgment of the professional accountant and firms. Firstly, the client and as well as the professional accountant should consider all the conflict of interest that could affect the judgment of professional accountant and the firms. Like what kind of conflict of interest with these two parties could affect is something that they need to look for very detailed. Second is the commission. Sometimes let's say for example a client is coming to us and he's saying that he needs a specific service, and we know someone that who provides the service. So we refer the client to someone external. Now in that case, the external party might give us commission, right? As a professional accountant, we have referred someone, so they will give us commission. Now when any commission or referral fee or reward may be earned for introduction of a client or as a result of advice given to a client, a self-interest threat arises. Like in this case, what happens is that we are referring the client only to that specified person whom we are tied up with. So that is called as commission. Like we are interested only to give or refer the client to that person, and client does not have a free will. And also there is a self-interest that somehow if we are also giving commission to someone, then we want the client to be paneled with us. That like we really need them to be paneled with us. So until and unless the client agrees that the commission may be kept, it is client's money and must be paid across to the client. So if we are getting commission by referring the client to an external service provider, and the client will be giving face to the external service provider, based on that we will get a commission. Now it's actually the client's money. Now what happens is, just because we are referring to him, the person can be overcharging the client, so the client could lose, or the person might not be good, so we could lose, and just because we want to earn additional income, we are referring to them. So such fees should be declined by professionals who only have income directly through client fees. So if you are having only the income directly through the client fees, you should not take up such referral fees or referral income or referral commission, because it could be acted as part of the bribe. It can be considered as part of bribe as well. And what safeguard we need to ensure is that you need to discuss with the client and tell them, disclose them in writing that if we are referring someone, if you are referring something, or if you are referring someone, then definitely such commission could be received. And as soon as practicable, or of its amounts and terms should be mentioned. And obtaining advance agreement from the client for the referral agreement and fee, etc. So you need to have an agreement as well with the client. So there could be multiple commissions we could include. One is that we could refer the client to someone and we could receive commission. Second is that we might be referring someone to the client, and the client can be earning money, business, etc. So let us say that there is a client of us, let us say, who is doing a printing business. Okay, there is a client of us who is doing a printing business. Now there is another client for us who needs some documents to be printed. So what do? We give this B client to the A client who is in the printing business. And we'll tell the A client and tell them that, see, I've got you a business, you give me a commission of it. Those kind of activities are creating self-interest threats. The third one is agency work. The acceptance by a professional accountant in public practice of an agency for the supply of services products may present a conflict of interest. So you are acting as an agent of the client. Okay, that could create a conflict of interest. The agency should only be accepted if compliance with the fundamental principle, which is not compromised. So if it is complying with the fundamental principles, you can take it. Otherwise, you should not. Nature of the services offered as a professional accountant, like it is not conflicting with the nature of services that we are offering as a professional accountant. Like if you are giving audit services, we cannot have a business relationship. Agency could be considered as a business relationship. And as per the threats, it's mentioned that we cannot have agency related business. Manner in which those services are not inappropriate. So we are not doing anything inappropriate. Then also this kind of threat can subsidize or safeguard it. The other type of conflict of interest is client versus client. Here, what happens is that in this situation, what happens is that there could be conflict of interest which could exist between new client and our existing client. Let's say, for example, I have a client called as Coca-Cola, okay, which is in the FMCG business. Now, let's say, for example, Pepsi company. We have Pepsi company, audit is being opened. So we kind of approach them and we pitch them and we got the client. So now we have Coca-Cola as well as Pepsi company as our client. Now, both of them could be furious, right? If both of them we are only auditing, then secrets could be shared. Like Coca-Cola's confidential information could be shared to Pepsi company and vice versa. So that is a conflict of interest. Like Coca-Cola could be like, you cannot audit Pepsi company because I am already your client and you know the details. That will not work. Those kind of issues could arise. Alright. So we need to deal with this very carefully, and the safeguards and disclosures, what we can do is we need to give all the information to both parties. Like we need to mention the about this conflict of interest to Coca-Cola as well as the Pepsi company, stating that we have a client called as Pepsi company which we have got very recently. To Pepsi also we need to say that we have got a client called as Coca-Cola whom we have got very recently. So those kind of safeguards should be applied, disclosure should be considered, and the client should be informed very clearly. Also, in relation to the safeguards, separate engagement teams should be created with clear policies and procedures. Separate teams should be created with clear policies and procedures. Okay, there should be appropriate review teams like engagement quality reviews, quality control reviews, etc. should be implemented. They should also be implemented. Okay, that's very important to have these kind of matters addressed. Now, one thing is that if, let's say, for example, I have been auditing Coca-Cola and we have exited the relationship with Coca-Cola. We are no longer the auditor of Coca-Cola. We have moved on. And if 2 years have been completed after we have last audited the Coca-Cola, it has been 2 years since we have audited them and we have exited the relationship, then there is no conflict of interest. Because it's been done, we have completed Coca-Cola audits and we have no longer their auditors, and after 2 years, we can go and take Pepsi company's audit. There is no conflict of interest on that matter.